Alright, this video is going to go over the money flow index indicator right here. It's going to go over an article I'm writing about it. So the money flow index indicator is one that has been a mainstay in my trading arsenal. I like it better than the RSI, better than the MACD. And the reason why is, to me, it's very easy to interpret. So basically how I have it set up right here is the length. It just looks back the past 14 bars, and then the style for it, the line that just goes up is kind of like that reddish maroon color, and then the overbought oversold area, you can actually make these bars wider than they are, like that. So that may be a little bit easier to see, make that a little bit easier to see. And you can also change up the colors, so when like the red line goes over into it, and that's what I did for the background. Made the background slightly green, so it's easier to see when price broke out above the black line for it, because the main areas that you're going to look for the MFI are the 80 and 20. When the MFI rises above the 80, it signifies that the market could be potentially overbought, and when it goes down below the 20, it indicates that market could be potentially oversold. And so with that, the MFI indicator, it is a momentum indicator. It is not a timing indicator. So you can't just based upon, right here we're looking at the old chart, like look at this one right here. Let me show you what it looks like. Like right here, look at that. It says that it is completely oversold right there. So you expect it to really pop up right away, but it doesn't happen right away. You can see it goes down to the oversold territory, stays there for a while, pops up a little bit, continues down, even though the MFI is moving back up, and then not until a little bit later we have that move up right there. So you cannot use it strictly based off of when it shows that price is overbought, oversold, to just enter to a trade and expected profits. You'll bust your account if you do that, because how it works is it measures the inflow and outflow of money in a security over a specific period of time. So that's basically what it's doing. Is the volume, when it's coming in on it, it will move up, and when it's going out of it, it will move down. Or when the selling pressure is picking up, move down, buying pressure moving up, it goes up. So basically, just think of it as a momentum indicator. It is not a timing indicator. So a couple examples, I'll show you the reasons how it works. A couple differences with it is, it does show, just like everything else, it does show divergence, because here you have it showing being overbought over here, a lower overbought, and then even less overbought, while the price right here, these are using the SP E-mini futures contracts from the weekly chart. This is all the way back in the early 2000s, late 1990s. But price was continuing to move up while the MFI was moving down, and there's just, the typical divergence indicator that it shows. Unfortunately, like I said earlier, it's not a timing indicator, because if it was, then obviously you would have wanted to get short right about here and ride all those profits right down to it. The next thing is, again, why it is a momentum indicator, not a timing indicator, is price continued lower after the MFI showed it being oversold. Because look, price first went down and MFI being oversold right here, so you think, okay, price should turn up right here and start going back up, but price did not. It did just slightly back to it, and then just sold off all the way down. This is the financial crisis way back here in 2008, 2009, and price continued to move on lower. But what it does signify is that it should eventually turn around, and with that, when the price is just cratering right here, the MFI was completely showing that the market continued to be oversold. It was a matter of when, not if, the market was going to turn around. And then finally it did. It had that one last push off down right here, and then sold off over there. But another reason why you just can't use it strictly on its own is, look at this. When price was rallying out of the financial crisis, this back in 2012, 2013, price continued to bump up to the overbought areas, and it was even making higher highs, like we saw in the first one I showed you. The MFI, was making lower highs, but the price is making higher highs. But we never had that sell-off. I mean, we had a couple, small one right there, small one right there, nothing really right here, and price kept on going up for it. So those are some of the limitations for it, that you cannot just strictly use it off of making it a timing indicator where price hits in the overbought, oversold levels, and then it looks to move around. But how I like to use it in my trading strategies, I just use it as a tool as part of the arsenal to see when the market should be overbought or oversold, and that helps me determine whether or not I want to get into a trade based upon what it is doing. So like for instance right here, one of the trade setups I have and that I use is using this day right here and that day. I'll draw the Fibonacci daily extension levels, because if price is going to go up here and hit one of these levels, typically price tends to turn around or at least retrace some to get to finish out that trade right there. But if price hits this line and doesn't retrace back deeply, like right there, or if price continues to move up and hits that line, doesn't retrace back to that bottom line right there, then we know we have a market that is kind of unstable, meaning we expect price to move back here. And since it hasn't, then we will start looking for shorting opportunities within the market. Now there's a couple of other variables I look for, but for the main part is what I would look for is I look for price to go in the oversold territory. And then when it does that, I would think about getting in. Now, I would not look at taking any overbought trades just because I'm looking for a short trade right up here. And so the next thing I look for, so you have that, that's the entry. So then what I do is I look for the next day right there. And I'll go ahead and move it back to the daily extension target. Is I would look for the trade setups to hit off this one and take it all the way back down to there. Now obviously that doesn't always happen, but we'll just say for the sake of this trade right here, so the next day hit up up in here. And so what I'd be looking for what's going to take that trade is I would look for it to be in conjunction with MFI showing that the market is at an overbought level for it, meaning right up here. Overbought's up top, oversold's down low. So if I ever confuse those, just ignore me, because above the 80 means the market's overbought. Below the market means below the 20 means the market is oversold. So that bottom looks to buy, top you look to sell. So that's the easiest way of thinking about it. Top is selling, bottom is buying. So when the price moved up to here, that could be a great selling opportunity right there. One, because it's hitting off of the next day's Fibonacci daily extension level right there, and you see it hit that, and then it sold off some right there. And then price continued to move higher. It hit up there again, and this is completely golly, what am I looking for? Overbought. Overbought up top, oversold's down low. So you want to buy at the bottom, sell at the top. Buy at the bottom, sell at the top. I confuse myself sometimes. So price continues to go oversold. Did slightly sell off, but not a whole lot, and then it took it all the way up here for whatever when the market opened right up here for it to sell off. So even right there you can see we definitely have a divergence between the price and then the MFI indicator right there. But I would use a conjunction with that because this is in the sell territory based upon this initial target all the way down here. Now obviously price didn't go down there and hit that, but it did give you a nice selling, over $1 here, almost $1.50 in the oil market, and the price has continued to move up there since. So what I'll do is just keep looking for, based upon the different days, areas to short the market. So we have like going on this one right there. There we have that one. So we can see when the price went up to right here, that could have been potential selling, but the price hadn't reached the MFI, being in the the overbought territory right there. And then in the next kind of one, it did hit there right there, being overbought. You see it ticked off the 0.414. So if you gotten in short right there, you could have ridden it down to there, about 53 ticks right there in the old market. So it just uses it in conjunction for it. Now, just like most other indicators, the MFI indicator is a lagging indicator. So the price in whatever your market you're looking to trade has to confirm first, and then the MFI indicator will confirm whichever way it's going up and down right there. If we look at oil here real quick, this, I know it looks horrible. That was that one day when the futures contracts all expired, and then when also the market was just tanking as well for oil. But if we look at here recently, back in March of 2022, we can see right here that the market was completely oversold in the oil market. it was also hitting the 1.14 level over here. So we had a really nice sell setup right there, going from the 1.44 down to the 1.46 for 28 points here in the oil market. So that is how I use it. Just use it in conjunction with the way with other areas that you are looking to trade here with the market. I mean, it works with pretty much anything. It works with stocks, futures. Here's a Bitcoin. It even works with Bitcoin. Here's what I'm looking at for Bitcoin moving forward, going into this weekly chart for it. I have it the way I trade on a 5-wave LA move, 0, 1, 2, 3, 4, 5. So potentially we're looking at Bitcoin going up to about a little over, at minimum, $78,000 for it. If Bitcoin goes and breaks this yellow line right here, then it would invalidate the 5-wave LA move for it. But if it stays there, we're looking for about 78,000 for it. So we're looking for some like turning points for Bitcoin. So when price, got down right about there, it looked like that was a good position where the market could be looking at turning around. Took a little bit longer, but then it did. But now look at it now, the market for Bitcoin is getting close to getting the overbought territory up over here. So if it continues pushing up higher and hits over there, then we probably will look for a little bit of pullback here in the Bitcoin market here in the next couple of weeks. Moving up, look at this one right here. It started all the way down here, and this is why you can't use it strictly as a trading indicator. Another reason why. It started all the way back down here when the price went into the overbought territory, and then just continued straight up until there, until we finally had that pullback way back in there for it right there. And then I don't have one thing set up, but if you do use like Forex, we can use USD, JPY. You can use it here on here as well, where it shows again just the overbought, oversold indicators. Currently at this time I'm not doing any Forex trading, but I probably will eventually get back into it. But just want to show the MFI indicator does work on Forex as well. So that is it for the MFI indicator. Two things to remember. The main thing about it, it is a lagging indicator, so you have to wait for the price and whatever you're trading to close first, then the MFI indicator will update. And then secondly, probably most important, it is a momentum indicator, not a timing indicator. So you can't just, again, I know I'm hammering this home, but it's something I had to learn. You can't just wait until price hits being overbought or oversold down here and then expect to get in trade and make lots of money. So you can see, hit it being overbought over here and just continue to rise up. It never really had, that sell-off at all. It went straight into overbought and just continued to move on up. So you have to use it in conjunction with your other trading setups, styles, and everything like that. But hopefully it will help filter some of the trades out, so you'll minimize your losses, maximize your gains, and add to your trading count with the trades. All right, hope that helped. Talk to you later. Bye.